Welcome to Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the S&P 500. I'm going to cover the ASX 200 as well as gold, copper, oil, and uranium in a separate video. I'll leave a link for that in the description section below. As always, this is general commentary. It doesn't take your personal situation into account. With all of that said, let's get into our first chart. So we're going to start off with the S&P 500. And it's well, we're starting to see that signs of that pullback that we've been talking about over the last couple of weeks. And so far the market's down. It's down a bit over 2% from its high. So not much, but really that's actually the largest pullback since October. So I think that just goes to show how strong the last 2 months has been, that we haven't had as much as a 2% pullback. I think the odds here favor more consolidation. And I think we've got to remember that like prices ran 17% in a couple of months. So that's an exceptionally strong period. And it's likely going to take the market a bit of time, I think, to consolidate those gains before we can look at like what could potentially come next. I'd also add that the S&P 500 is also still at elevated levels when we look at these moving averages. So I've got the 50 and the 100-day moving averages. And whilst price has come a bit closer to those averages, it's still reasonably high. And I think that should the market continue to pause over the next several weeks, it gives those averages a chance to catch up. Now, as I've been saying over the last couple of weeks, I don't think at current levels that the S&P 500 offers an asymmetric entry level. What I'd like to see at this point is I'd like to see how any potential consolidation plays out, and then make decisions from what we see in the price action rather than chasing stocks that have already run hard. And the important thing I think always to keep in mind is that consolidations they really form a healthy part. Well, they form an important part of every healthy upward trend. So my preference at this stage is to look for stocks that are breaking out of ranges, that are rallying off their moving averages. I'm happy to maintain an exposure to the S&P 500, but and saying that by maintaining an exposure, it's all about that principle of letting profits run. So I'm happy to let profits run, but at least in the near term, given the extent of this rally and the prospect of more consolidation, I'm now being selective, like extra selective in what I'd buy, what I'd bring into the portfolio at this point. Going over and having a look at the Nasdaq and also pullback. It's another story of pullback. Nasdaq actually hit a new all-time high on Thursday a week ago. So it's unlike the S&P 500, which hasn't quite got there, the Nasdaq has. And it's so we're already seeing this pullback. It is coming back to the moving averages, and I think that pullback towards the averages can continue. Overall, I think the price action is positive, but I think we should be looking for further consolidation over the coming weeks. And what I'm looking for now, I'm looking for signs that this dip is being bought, that there's accumulation on the pullback, and the prices can then stabilize somewhere around this area where the moving averages currently are. Well, then that potentially sets up for a platform for further gains. I don't think those further gains are coming in the near term. I think we need to look for that consolidation, but I think the play remains to maintain long exposure, but just to be extra selective when adding to new positions whilst we let this consolidation work its way through. Now, if you get some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. Just tells YouTube people are watching, and then YouTube does what it does and shows other people. Now, I want to move over to the small caps, because this has been one of the great turnaround stories of last year. It's been seeing the small caps go from a 52-week low to a 52-week high in just 48 days. It really is extraordinary. We don't see that sort of price action often. I think the odds favour the that this strength will flow into the new year. But in the near term, it's I think it's another story of consolidation. No one should expect that the gains we saw in the last couple of months of 2023 are going to be replicated in the first couple of months of this year. I think consolidation is the likely price action that we're going to at least initially see. Prices briefly got above, broke to the top side of this trading range, which the Russell's been in for the last 18 months. Briefly broke to the top side a week ago, but has since pulled back inside the range. I don't think that's a concern. I wouldn't be looking at this and saying, oh, look, it's a false break. Prices weren't able to follow through. You just have to look at how far they ran. They were stretched, they were extended, they did need to pull back. Seeing this pullback within the range, I think is quite normal and quite appropriate price action for what we've seen. As I've said before, I think this is a natural place to see that pause in the trend, and then gives the Russell a chance to potentially build up energy for then a sustained breakout as we move into this year. But I think that potentially comes later. I don't think that's something we're looking for in the near term. We've already started to come back towards the moving averages after getting stretched well above them. Probably still, as I say, still more consolidation to come. For me, it's a case of staying long stocks, using those wide trailing stops to manage risk. For me, it's really all about what I want to do is I want to be able to see off potential pullbacks and stay on the broader upward trend. It's not about getting little pieces of a trend. It's about getting a big chunk of a larger advance over many months or even longer, and that often requires those wide trailing stops. Now, just to finish up, let's jump over and just have a quick look at the 10-year bond. And it looks to me like we may have hit a temporary low in yield. And what we've had a situation where after becoming just overdone on the rise in yield towards the end of last year, we've seen the bond cycle from being above the moving averages to below the moving averages. So below the moving averages is seeing yields fall, yields decline. But what often happens when you see a market go from above the moving averages to below is there's often a retest. And that's where I think the yield currently is. It's starting to move off these lows. I think it's heading back towards these moving averages. So maybe we're going to see some sort of moderate or mild increase in yield over the next few weeks. Maybe that coincides with an ongoing consolidation in stocks. So look, that's something interesting that we could see play out over the near term. But look, let's call that a wrap for this week. Thank you for joining me. Hopefully that's been helpful. It's been great having you with me as we move into this new year, and I look forward to coming back and talking to you next week. Until then, bye for now.